Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of March the 19th, 2018. Now, to get started this week, we're going to begin with the US dollar index. However, we have a very choppy, volatile week ahead of us with with the FOMC. We have a new Fed chair, new Fed projections. So right now, what I would say, in my respectful opinion, that we've got a buy the rumor, sell the fact type of deal going here, guys. We've got a very sideways chop here on the dollar index between 90.60 and about the 88.60 level. Now we've got a very weak buy signal here from VantagePoint. It is gaining some strength here, but again, my concern is that this is nothing more than a buy the rumor, sell the fact. So if we can break free and clear of 90.60, we could see more prolonged US dollar strength. But again, so far in the calendar year 2008, the dollar index is very, very negative on the year. So if you bought the dollar on January 1st, you've been losing money the entire year. Now, that doesn't mean there's good, decent intraday trading. But again, we've got to look for the bigger picture here. Can the dollar gain any traction? But with the current political environment, it's just not overly supportive. So we'll see what this new Fed chair does, what his game plan is going forward. That may give the dollar the very much needed boost, but again, my optimism on that remains heavily guarded at this time. So in my respectful opinion, we continue to play this range, very tight range on the dollar. We do show strength in the dollar for till at least Wednesday of next week, more than likely. But if we can't break through this 90.60 area on the dollar index, then guys, absolutely nothing has changed. We can see that same thing is transitioning over to gold, where we've got a sell signal on gold, but we're still well within the same range between 1370 and about the 1290 mark. Nothing has changed there either. So gold obviously weak ahead of the non-farm payroll, but that could violently reverse, as could oil. Now with oil is showing good signs of strength. We've got heavy support here at the 60 level, finally breaking through that key VantagePoint 18-day predicted moving average. But once again, guys, it's not a very strong, what I would call a strong buy signal on oil, because we remain trapped. The broader range here is coming in around 66, between 66.80 and about the 57.80 mark. But this very small range we have going right now, inside of that range is between 64.50 and the 60 level. So very tight channel here, but if we get further dollar strength, that could push oil lower. But again, at this particular time, I think that oil is going to remain range bound for the better part of this year. Now, when we look at the global equity markets, basically we can determine that through the S&P 500. Not showing an overly bullish move. We are holding above that critical VantagePoint long-term crossover pivot area at 27.46. So longs carry a slight edge there. But once again, we're not making any new highs here, guys, in 2018. We've put in a pretty strong top and a pretty strong bottom, but we're basically just within that, still within a well-defined range here. Volatility clearly coming back into the market, as we can see the chop. The S&P 500 is no longer just going straight up like it's been doing. When we look at this over the last 6 months, I think those good old days are gone here, guys. We're going to see volatility back in the market with a bias actually lower on the S&P. So if the Fed talks about not hiking for the rest of the year, then the S&P will aggressively move higher. But if the Fed starts talking multiple rate hikes this year and next year, then the S&P is going to come under some potential significant selling pressure. Now, as we get into our main Forex pairs here, we've got a very busy week ahead of us. And of course, the first pair we want to go to is the Euro-US. Now with Euro-US, we're still within the broader range, guys, between 125.50 and 121.50. Very little has changed. We've made a slightly new low here, but the buyers came right back in, but they didn't take it higher back above 125. Right now, Euro-US is clearly bearish. As we can see, we've breached 124.01, that key VantagePoint level. Our predicted differences are pointing lower. Our predicted RSI at at 33.0. It's suggesting momentum is building to the downside, but only a sustained break of the current range will see this pair sell off any further. And again, my optimism on that remains heavily guarded at that time, as the euro is very positive actually on the year. When we look at the US Swiss franc, basically mirrors the euro US, the inverse correlation there. 94.36 is a key area. We've come down and tested that. Suggests we're going to get a little bit more strength on this particular pair, but it's going to be determined by the Fed here, guys. I cannot stress that enough. So we really want to back off our trading here until Wednesday. We hear what this new Fed's game plan is, how many times they're looking at hiking, what they think of the economy, the current political situation, all of these different things. So keep that in mind, but for now, a slight bias to the upside on this particular pair. Now, when we look at the British pound US dollar for next week, we're again coming into a very tight wedge formation. We're still holding above 139.06, that key vantage point level. Now, when we look at those additional indicators from Vantage Point, we can see that we've got the medium term crossing the long term predicted difference, which could signal a move down, but our predicted RSI is still holding above 60 at 64.3, suggesting we still have more upside potential here. So what I would do is watch for a breakdown before or after the Fed to the downside, but I think that longs are still very much in play while above 137. Now, we've got a significant trend line here. We'll see if the bottom part of this trend line can hold. But again, right now, when we look at those key vantage point crossovers, our short term is flat, but our medium and our long term crossovers are saying we've still got upside potential here. So once again, the US dollar is either going to strengthen or weaken right across the board. So that's what we have to watch out for, because that's what would put pressure on the pound dollar. Now, as we come into some of our commodity currencies, and of course the dollar yen, when we look at the dollar yen, we've had, again, I've talked about this one at length, even in the training room in the Vantage Point training room last week, where basically I'm saying just sell this thing into rallies. We've got the key Vantage Point level 106.66, 106.30. I would anticipate a potential break of 106.66 this week. Pre-Fed. Now, after the Fed, it's anybody's guess what this Fed is going to say or do. So we have to be very, very cautious around that announcement. But it just doesn't seem to matter how hawkish the Fed gets. Any move up is met with sellers. The big money is clearly buying yuan currency, the yen currency, and they're not interested in buying US dollars at this time. So for now, we'll continue to monitor this, but the downside is still very relevant. We can see the medium term crossing the long term predicted difference, the break of the 60 level and the predicted RSI. Very little has changed here, guys. So once again, any retracement higher, that is something we should look at selling, right? So when we come into our three main commodity currencies, they're going to basically all move together here. But I think there could be some very good opportunity of buying these commodity currencies if we get a more dovish Fed, or a Fed that is less hawkish on the U.S. economy. Money will start going back into oil. It'll go back into gold, some of the other metals, and put pressure, downward pressure, on the US dollar. Right now, we do have an overbought condition on US Canada. When we look at this pair over the last year, it's normally very bullish at this time of year. Now, when oil starts to really strengthen, when we get into the summer driving months, when we look at this area back up here, the one that's fantastic in currencies, guys, versus stocks is that currencies are very repetitive, and they move with more or less a sector rotation, if you will, where, every time of year when oil starts to strengthen, and that's usually around May, the Canadian dollar strengthens, and we can see that. So we should expect potentially a little bit more upside here, but a lot of this, the break of this resistance level here, again, in my respectful opinion, is because of the talk of the Trump trade war, or more tariffs against Canada. He definitely seems to be targeting Canada more than Mexico, which is surprising, in my opinion. But again, when we look at the key Vantage Point 18-day predicted moving average, that's coming in at about 128.62, so we're a long while above this area, but a break of that level would have us go short very, very quickly. But I think we're still, for a really good short trade, I think we're still a few weeks out. Now, when we look at the Aussie US currency, we've got a known bottom here down around this 77 area, further support down to 76.50 or so. There could be a reversal long trade coming here, but again, it's going to be determined by the Fed. So going into a lot of analysis on this right now, I don't think is relevant, because if commodities turn back to the upside, and we can see that oil is still holding firm, if gold starts to turn back up, then Aussie's going to move back up also against the US dollar. So potentially some very good buying opportunity. Now, those key levels, the area to watch for this week, 78.19. If we can get back up above that area, that will take the pressure off the downside. Now, this could be a double bottom we've got in place right here based on Friday's bar, but in most cases what happens here, this low at 77.09, before we determine if it's a double bottom or not, the market will try and push it about 40 pips below that. Then we'll have a violent reversal. So be on the lookout for a long trade here on this particular pair in the days and weeks ahead. But looking at the VantagePoint indicators, we do have further downside, but 18.7 here, that's on the predicted RSI, tells me we're going to be retracing higher very, very soon. Same as New Zealand, US guys, almost the identical trade. There's a known bottom down here, 71.80. I would be looking for a long opportunity there this week. Also, once we get confirmation from some of the shorter term VantagePoint indicators. We don't have that yet, but again, the majority of the trades for next week, guys, are going to be a buy the rumor and potentially sell the fact type of deal. When we get into that non-farm, or excuse me, my head is stuck on non-farm payroll. I apologize. When we get into the FOMC next week, we really need to look at the details of that report and not trade around that, because often the Fed will say one thing and do another. And then remember, in a week or two from now, we'll have the Fed minutes, which could say something different again. So the Fed is very much in play here next week, over the next couple of weeks actually. So keep that in mind when in all of your trading. So with that said, this is the Forex Weekly Outlook for the week of March the 19th, 2018.